Hello, legends. How is everyone doing? Uh, it has been a while that I haven't uploaded any video, so I thought it would be better to use my free time as I will be free for a month or so. So I thought to upload some market reviews on Euro dollar, US dollar index, and then another video on crypto market. So we will start with this video, and it will be my first video after a while. So let's dive into the Euro USD chart. As you might have been following me on my Telegram, that I have uploaded uh, updates on Euro USD chart. So today we will do just a market review and we will see where Euro USD is going to and how we can trade it. So we start from Euro dollar chart. To do a market review on Euro USD, I would love to go to the higher time frame and share my higher time frame view that I have also shared them in my Telegram. So let's go to the Euro USD weekly chart. If you remember, it was I think at the start of Q2 that I shared this higher time frame play for this year, and I said that I'm expecting such a power of three for this year candle, and I said that this move to below Q1 low is only a manipulation, and we will have expansion to the upside going up into Q1 high, and then this buy side liquidity, and eventually this buy side liquidity. And previous yearly high is here, this equal highs. So this was our yearly candle power of three that I shared at the start of Q1, Q2, and it has been playing quite well. So now we go to the other charts like daily time frame. Another higher time frame power of three that I have shared, it was this chart. I'm sure that you have been following this power of three. Uh, I use this power of three inside this Q1 range low and range high. In this daily time frame, you can see that last time when I shared this power of three price was around here, and after that it did this explosive move to the upside, then a correction to the downside with SMT, and then again expansion to the upside, making higher high. Now it's retesting this daily fair value gap and this daily volume imbalance to extend higher into this external range liquidity, and then this Q1 high, and eventually this buy side liquidity on daily time frame. So this is our higher time frame power of three for daily time frame that I have shared, and it has been playing quite well. So I prefer to start our market review from US dollar index, then we will go to euro dollar, and I will share what we can expect for this week and for the coming weeks. Okay, guys, we are on US dollar index daily chart. Uh, if you follow my Telegram channel, you have already seen this chart, so I shared it in my YouTube as well. As you can see on this chart, after this manipulation to the upside, we had this market structure shift, and this down candles before this up move flipped into a breaker block, and as it had the daily fair value gap, it becomes daily unicorn. So price has tagged this once here and then here and here after taking these highs. Then price went back, making market structure shift. Since that, US dollar index has been bearish and it has been trading to the downside, and the institutional order flow is bearish. You can see that every PDRA on the upside has been respected, and price is invalidating the lows and taking liquidity from the sell sides, which are below this lows and this low. So since this shift in structure, you can see that order flow is bearish. Price has tagged this daily fair value gap, then made a CIST below this daily order block, retested this daily order block, and expanded below this uh, bullish order block in the past that acted as a support. Now that price went below this and price in the sell side, this order block on the buy side flips to be a mitigation block. So you can see that this mitigation block has been acting as a resistance in here. And if you take from this high to this low, 50% and premium level of this range will be here. So price has pumped into the premium, tag this mitigation block and this daily fair value gap, which is internal range liquidity. Then now it's going down towards this external range liquidity. Also, this is the Monday range from the previous week. So Monday range price didn't close above it on the daily time frame. And now we can expect that this external range liquidity in the sell side will be targeted in the coming days. And probably tomorrow we have CPI. After CPI, or maybe by the next week, this will be tagged, right? And we should be targeting this level. So the daily time frame bias and the daily candle bias is bearish, and we expect expansion to this external range liquidity. Now we go to Euro USD chart. This is a cleaner chart of Euro USD daily time frame. In this chart, you can see that at every low that we had been farmed, we had SMT divergence. So after this massive expansion, price retraced into discount and into this breakaway fair value gap, tagged the high of this fair value gap, made SMT divergence versus US dollar index, then expanded to upside, causing a break in a structure, break of structure. So the dealing region that the price is inside of it is this low to this high. And if we take this low to that high, the 50% of this range will be essential for us, which is here at Monday low, and below this level is discount. So if price wants to go higher, it will retrace into discount area and will take an internal range liquidity. Then it will expand to the external range liquidity and will make higher highs. So according to daily time frame, we have this Monday range from previous week. Price has been ranging within this in few recent days, and on last Thursday it tagged this Monday low, also this daily fair value gap, and closed inside. So according to this candle close, we can expect that bias is bullish, and we should target this Monday high in coming days. So the initial target for us and bias will be this Monday high. Then we might go for this Q1 high. Now we have a clear bias. We dive into the hourly time frame. We use time frame alignment, which is daily time frame, then 1 hour time frame to understanding the market maker buy model, and then you can use 15-minute or 5-minute time frame for entries. So this is the Monday range from the previous week, and this is the Monday range from current week. You can see that price has swept this low in here. Okay, to play this Monday range and market maker buy model, we zoom into the hourly time frame, and you can see this is the previous week's Monday low and this is the Monday high. Price has tagged into this level, which was also daily fair value gap, swept the internal range liquidity, then it pumped above this candle high. What does it mean? It means change in the state of delivery, and we can expect reversal from this level and pump to the upside. So this was initial change in the state of delivery price did on Thursday, and then on Friday price was in a range that we haven't traded, and this Monday price was also in a consolidation, so we haven't traded a Monday as well. But on Tuesday we would look into kill zones and find some setups to long inside those kill zones and target buy side liquidities. So in hourly time frame, you can see after this change in state of delivery, price was in a range, and it tagged this liquidity today in London kill zone. Now we go to the lower time frame, but before going, you can use this 4-hour candle range also similar to this daily candle range. So you can see that this was the 4-hour candle range, and if price sweeps the sell side of this and closes back inside this range, we can expect that the buy side of this will be targeted, and we can play this as an internal range liquidity to external and market maker buy model on lower time frames. So we marked that level, and we had SMT versus DXY. Now we go to the 5-minute time frame. So this was the London kill zone from 2 a.m. New York time zone. This law was formed at 5 a.m. New York. After this manipulation to the downside, we had this pump and change in the state of delivery on 5 minute time frame. So after this, you could enter on the test of this order block. So your initial trade for today would be this one. The stop would be placed below this low, entry here, and you could target at least 2 hour, or if you are certain about your daily bias, you could play it all the way up to that daily time frame external range liquidity, which is this high. But usually you should target 2 hour or 3 hour on this setup. So why we entered in here? We had a change in the state of delivery after sweeping this daily time frame internal range liquidity and change in the state of delivery on 1 hour time frame. So then we dived into the 5 minute time frame at this liquidity zone and at London kill zone. So after this manipulation to downside on 5 minute and change in the state of delivery, we could enter in here with the stops below this. So this would be your initial entry, or you might also enter on this inversion fair value gap, which price has retested after break of structure and then pumped higher. So this would be your initial trade for today. And after this pump, the second trade would be in New York kill zone, which is from 7 up to 10, but I trade up to 12 noon, so which is here. And I use 15-minute time frame. In here you can see after this expansion, we had a consolidation, then another expansion. So you can also take this low to this high, like this, and enter at this fair value gap, which is hourly and 15-minute fair value gap with the stops in here and target this level. This would be also a 3 hour trade if you had taken like this. So this was the trades that you could take for today, and you could also risk free these trades and move your target higher into this Monday high, which is our daily candle target. And the actual 1 hour market maker buy model here was an accumulation and another accumulation. So market will take this buy side, and eventually this buy side liquidity. But if you missed today's price action and you haven't traded this market maker buy model and this daily time frame bias, which the target was this Monday high, what you can do, you can remove these levels and wait for tomorrow's London kill zone, or maybe after CPI news is announced. You go to a higher time frame once again into 1 hour time frame. So what might happen tomorrow is you take from this low to this high as a dealing range. So before CPI news or before London kill zone tomorrow, we might have some correction in Asia kill zone. Then after that correction and consolidation, we might see a manipulation below the mid of this dealing range, which is this discount area in London kill zone, or after CPI news to the downside. Then you can enter on those levels using a 5 minute or 15-minute time frame to target this Monday high. So the bias is still bullish, but we might also keep pumping into this Monday high before CPI news, and you might miss the entry. So the bias is clear, which is Monday high, and if you got an entry at the discount of this range, it would be a great trade tomorrow in London kill zone or New York kill zone. So this is how I trade Euro USD on daily basis. First of all, I determine my bias on daily time frame or weekly time frame, which was in here internal range liquidity to external range liquidity using this daily candle and this candle close, which was inside the range. So it means we are bullish for the high of this range. And then we use time frame alignment for daily. We go to 1 hour time frame to see if there is a market structure shift or change in the state of delivery. And after that, we wait at a right day, not on days that price is mostly consolidation like Friday and especially Monday. So in Tuesday, we had this down move below this consolidation as a manipulation and low of the week. Then we look for entries on this sell side liquidity, which is area of value for us, and we zoom into 5 minute time frame. We find this setup, which is CIST, change in state of delivery, and we enter on the test of this order block. Or you could enter on this OTE of New York kill zone, and you can target either 2 hour or 3 hour, or you could go for the buy side liquidity, which is this Monday high. So this is how I use different time frames to understand market bias, market maker models, and then entry models. For today, I use daily time frame for market bias, 1 hour time frame for market maker models, and for 5 minute or 15 minute time frame to find entry models and trade the direction I'm expecting the price to move. So this was Euro USD and US dollar index market review, and I hope you have a clear bias for coming days. And let's see what will be CPI data. And I personally expect that price will continue going up as the bias and order flow is bullish for you, Euro dollar, and bearish for US dollar index. I hope you enjoyed this video, and uh, I might share some more updates in coming days and will do more market reviews. So feel free to subscribe my YouTube channel and share this video with your friends so they don't miss this educational video. Have a great day.